Hello, traders. Let's have a great week. Richard, yes, AJ, we're aware of the Zoom. Can you guys hear me okay?
We can hear you loud and clear.
Okay,
Hey, Coach.
because I got a new headset. I just want to make sure.
All right.
All right. So how long have we been talking about Aussie? You're in the room pounding the table about Aussie. Down here, wasn't too late here. Buy breaks on the Fed. Looks pretty good. Nice call, Blake.
Thank you, sir. Hey, I'm going to be here with you in just about a minute. I'm
buddy.
just freshening up my coffee, so I'll be right there. Sorry,
Okay, buddy.
You know
right.
us at 4 o'clock in the morning. It's like I got to go get more coffee.
I heard an owl this morning.
You did? An owl?
An owl. Yeah.
I have an owl. It's kind of gross.
Hey guys,
we have one that lives in our neighborhood, and it shreds up rats and leaves.
They're huge birds. Huge.
Yeah, they're big
monsters.
Predators.
Yeah.
Big predators. Yeah.
Anyway, yeah. Hi, Grega.
Hey.
Good morning. Good afternoon to you. Is that Steve? Oh, you guys.
Yeah. None of you heard Grega pop in and say hi.
Yeah. I heard the wizard.
David.
Yeah. Hey, good to have the old crew here, huh? It's like the old days. So, pretty good follow through in Aussie. Not so much in Euro. I don't know about you guys. I just kind of have a vibe. I don't think I'd reach for anything now, even the Aussie, or the gold, or the silver. You know, in fact, it's 2040 level here in silver.
Well,
Dale,
funny you should say that. I just wrote in the chat room a few minutes ago. I took a quarter off at 2040.
Yeah,
it's gone very fast, very fast. So you have to respect the 50 DMA, which has come in. Is it the 50 DMA? Yeah, it is.
Yeah.
And
prior low.
Yeah, exactly. I'm still extremely bullish on it, but 8.5% in 5 sessions? Yeah, we'll take that.
Yeah, I mean, how often do you see moves in the gold silver ratio like that? I mean, even back here, look how much time it took. This looks, Grega could confirm, it looks pretty impulsive here on this gold silver ratio.
Yeah.
Okay. So what's a feature to you guys? Any, just jump in, anything that really strikes your fancy? I mean, thought the yen might dig in its heels here. We have some important support in the yen right here. Anyone want to take it?
Well, I think that dollar yen is clearly impulsive for the last 10 days or so, and I think that this 131.40, that was also the high back from May. This could be a temporary support. I think that there will be a fourth wave rally, but I assume that this could be opportunity to catch the current weakness, which in my opinion will stay in the cards for now. The resistance that I'm watching it on an intraday basis is
36.
around 134, around there.
Okay, right here. All righty.
Yeah.
All right, thanks. And have you flipped the positive, Grega, on the euro? I mean, it hasn't done anything but hold.
Well, I'm still looking for more upside in euro, but overall, I mean, euro is one of the weakest, so it's very difficult to play it on the long side. So if someone wants to trade something against the US dollar, I think that maybe it's better to pick something else.
Like the Aussie, the commodity currency.
Yeah, but we have the RBA tomorrow, and we have to keep in mind that Fed was not that hawkish, and maybe RBA will also trying to play the same role. So maybe there is some resistance on Aussie. I still favor a lot more upside on Aussie, but I'm aware of potential pullbacks.
Any view
Grega? Yeah.
I assume you came here to show us a couple of things. So do you want to grab the charts instead of explaining?
Yeah, sure. I can.
Putting you on the spot, man.
Okay, here. I stopped sharing.
By the way, Brian says I miss Ryan and Steve. I'm gonna take that personally. I'm gonna thank you. I'm not gonna be here anymore.
I think what he meant is I miss Ryan and K-Man. I love Stelios and Steve. I think that's what he meant to say.
Yes.
So, by the way, Stelios, you were on the Flow show today. From what I understand, Steve, you're going to be joining in too.
Yeah, I'm going to be tomorrow, and the rest of the week I'm going to be there. Yes.
Okay. All right. Well, so guys, make sure you guys are all there at the Flow show. Stelios was there today. Grega, jump in when you can.
Yeah, it was a lot more brief than Ryan and Cayman, but I covered a few things.
Well, hey, it's important just to get updated. I don't know what happened with the screens, but I'll take.
Well,
over.
I was Grega was going to. I thought Steve said
he's dropped out.
Okay, well, you know what? Let's. I got plenty of charts to show. So check this out, Dale. You were talking about the Aussie. I pulled all dollar longs off, shorts, off today, all of them.
Yeah. Okay.
But I want to share with you why I'm doing that. I'm not going to go through all the charts. But I'm going to go through some of the charts, obviously, because with ForexAnalytix, we try to reserve things not just for everybody on the free show. We try to reserve things for people that are part of the ForexAnalytix community. But with the Aussie dollar, we've been following this channel, and this channel is coming up to the 618 retracement, which every time we've gotten to this channel this last week, we've rejected it and we've come back down. I'm not in the camp of I need to start buying dollars across the board, but there is some pretty key levels that are being rejected today, and one of them happens to be with the euro dollar, and you can see this chart right here. It's 120.80, and we went as high today as 120.70, so we came pretty damn close. 85 I think is the resistance here. Over here was 82 or 85. I don't forget what it was, like 83. But you can see it's like pretty big resistance. Then on top of that, we have all this key resistance right here that is the previous, what is it?
Couldn't even get there.
Spike. I think it was 6 years ago, somewhere.
Don't you think it was weak that it couldn't even get there, Blake, on the way the dollar got hit last week?
Absolutely, and I can't imagine. Well, I have to imagine that everybody's trying to short the euro on a move back up towards 103.50. I know I am, like I personally am, and the scary thing is we can't even get there. That's the thing that scares me the most. And so while we're below that 103.50 level, I have to remain on the dollars in a nice bullish nice bullish trend camp. But then again, you look at the dollar index, and the dollar index is closing in on, and then you can see this is from the week ahead video. This is like really
105 prior high.
Yeah, major support coming into view. So I'm a little nervous here being on the short side of the dollar. And look, the dollar's been a great short all the way down and from these highs, and it's been a really nice move. But now that we're here, you have to start being a little careful. And Stelios, you want to talk a little bit about how you feel about silver?
Yeah, well, still very bullish, but as I said before, 50 DMA coming up, and the previous lows there, like you correctly have it. Plus, the dollar has gone. DMA. Yeah, there you go. The dollar has gone pretty far, pretty quickly. It just feels like there's a retracement coming. I am still very, very, very bullish, especially ever since the Fed didn't actually pivot, but they changed the way they're talking about how they're going to go forward. So nothing wrong with taking some profits. I always say, took a quarter of the position off, and I'm going to reconsider.
Alex, by the way, he said today was very fast but concise and very helpful, and that was for you, Stelios, for the Flow show.
Thank you, Alex. Your the money's in the post.
How much was it?
I cannot say. It's classified.
Okay.
It's good to have a shill.
It is, and Stellar's just. I want to share with you guys. These are closed pattern in plays. So this is. I actually got limited out on my silver pattern in play, from, whatever that was, however long ago that was. When was that taken? On
Look at all that green.
July 14th. So it's been 2 weeks. So 2 weeks, because it was sitting at the 618 retracement. This is a long-term, and I know I've talked a lot about it on like the week ahead video and, on our Morning Edge show. This is if you take the post-COVID move from the low to the high, there's a 618, and it's just simply back at its previous support. And I think this makes sense, Stel, because you've been really bullish down here. And now that we're at previous support, these are levels that might find some resistance.
Well, I was actually bullish for a while, but that's where I pulled the trigger. I always said, I'm bullish, but it's not the time to do it yet. And I was waiting, and I got lucky, I think.
Yeah. Well, I don't know if you got lucky. I think you were just, looking at some of the pretty important technical levels that were floating around, and I think you did a great job identifying that. So what? Tell us what's been happening as far as. Oh, wait, hold on, really quick. We just had some equities are coming down here. Remember, we are still in going through earnings season. So let's talk a little bit about the equity markets here. Dale, how do you feel about stocks at current levels?
I don't think we're done yet. I still think you'll get your, close to 42. I think we could have a down day or so, but we'll push to 42, and that'll be the battleground.
Yeah. Okay. So you think the battleground is going to be closer to 4,200? One of the things that I think that we have to be very, very aware of this week is that we do have jobs reports, the job report coming in at the end of the week. Obviously we're going to have a lot of data between now and then as far as U.S. data goes, but I'm going to ask your opinions here, and we can start with you, Dale, since you were just talking. Do you feel that we're going to start seeing a top in the jobs data? Do you think that the jobs data is going to start to show some serious signs of weakness? Is July the month, or is it too premature? What do you think?
I think it's premature. I mean, that's like
so you
fading
think that,
the
you
strength.
Think there's going to be some strong data coming in, or not super weak data. Let's just put it that way.
It's the strongest part of the economy, and that's because we have a labor shortage. So
I think we've already started seeing some signs of weakness. For example, if you break down the recent data, it shows that a lot of the jobs created are people taking second and third jobs, and you never do that for the pleasure of it, right? Or to get yourself more discretionary income. You do it because you can't make ends meet, right?
Yeah.
For example, just I was reading, I think it was yesterday, that Amazon has let go this year 100,000 employees worldwide. So I think the shifts in the job market have already started happening in a level that still doesn't get depicted that much on the numbers themselves. But I think it's a matter of time to actually see the numbers sour as well.
Yeah, well, I mean, it is a lagging. It's the
yes,
probably the most lagging data that
indicator
we have.
Yes,
but again, I'm going to ask you: is this the month where we start to see a significant shift in that data? Or
nobody can say that with certainty, Blake. I don't like to make predictions like that.
I'm not.
But I think that for every month
yes
that
or
passes,
no, I'm asking you to in your opinion, because I'm going to go ask Stelios's opinion next. So what do you?
I think for every month that passes, the chances increase substantially. That's the only thing I can say.
Very political. I don't think this is a month.
That is very much. I don't want to give you an answer, but I'm going to give you an answer. So what do you think, Stel?
I don't think this is a month that we're gonna.
I don't think so either.
That yet. But it's coming. It's coming, but not this month.
Of course, it's coming, but I don't think this is the month either. I don't. And that's what has me a little nervous about And just here's the data, just so you guys can kind of see the chart that we're talking about. I don't think this is the month yet that we start seeing data really significantly miss. I think we're going to get past the summer, so maybe it's going to be into the fall where we start to see.
It is likely, yes.
Okay. That's Steve's answer. I was looking for Steve's answer. I was fishing around for it. So there we go.
Well, you're trying to fade the strongest indicators. There's a labor shortage. It's kind of like secular. People let the Great Resignation. So for that to weaken, it's going to take a lot because there just aren't enough workers.
Yeah, and I really believe that I don't think that what I want to say, that employers have really started to feel some of the heat from the inflation, where to a point where they're actually letting go, their margins are getting squeezed where they actually have to start letting people go. I don't think we're quite there yet. So I think there's a lot of factors that are going to keep our employment relatively strong. But once that really starts to show some signs of weakness, that's when you're going to see a major Fed pivot, in my opinion, because it's kind of like that one,
that'll do it.
Yeah, I think it's going to be that one, time where we don't have, everything's starting to weaken. So anyway, I think it's going to be important that
Speaking of which, and on the subject, Blake, I like to watch the press conferences of big central banks. Actually, practically only the ECB and the Fed post-event, when you have more time to actually, the markets are not moving, etc. Powell was asked a couple of questions that more or less he refused to answer multiple times. One had to do with the labor market and what kind of a move in the labor market would signal to him that they should, focus on the jobs. He refused to answer that. The other one had to do with recession. He was asked like 3-4 times about that, and he refused to talk about it. The third or fourth time he was asked, he gave a very subtle answer. He was asked about if he thinks we are in a recession and what they're going to do if we get into recession. He didn't want to answer on that also. The fact that they're just ignoring these questions show that they don't want to answer them, right? Because they don't want the market to know what their pressure point is having to do with this. And the fact that they don't want to answer it is obvious, in my opinion, is evidence that they do see it coming, right? Because if they really didn't see any of that coming at all, they would be like, what are you talking about? We're not foreseeing any weakness in the labor market or any recession. Of course, now we're even technically in a recession, so it's less important.
The good news is they didn't see inflation coming, so they didn't see a lot of things coming.
The same people that didn't see inflation coming.
Right. Exactly.
When I was interviewing Victor Sperando, I said, "Do you think the Fed could make another policy error?" He said, "They always make policy errors.
That's all they do, practically."
Yeah, that's their forte.
I mean, let's admit that's a pretty tough job. Being a central banker. I'm sorry, it's not a job that I would want. I'd rather be the leader of a country over a central banker.
But not for the right reasons, Blake. Unfortunately, this job is not difficult, because making proper monetary policy decisions is as tough. It is actually a tough job because this job long ago stopped being a job of an economist trying to properly manage inflation and monetary policy, and it has become more the job of a person that is
backstop.
Yes, that is a backstop of politicians and is actually a politician himself. I remind you that when they confronted Bernanke about, him not admitting we were in inflation, we were in a recession when we were in one, he himself said that, what did you expect me to do? I was part of the Bush administration, which was an open, which was an open admission that this is not an independent job, right? It is
they're not
purely a
civil
political job.
servants.
Yeah.
Oh,
And
yeah,
that's what makes it very tough.
it does. It does. Sorry, I'm just trying to do something over here, guys. Trying to actually buy something right now. Okay, sorry about that.
A Rolex. Now the price is coming down.
That wasn't what I was trying to buy, but you know,
Crypto bros are selling them. Crypto is selling everywhere.
Steven wants to know. He says, "Show us Blake." No, there's certain things that I reserve for the ForexAnalytix community, which are all here in the trades room. So come join us. We'll see you there. Okay.
He only strips for us.
What's that?
You only strip for us.
That's right. Yeah. Sorry, I'm just continuing on here, just really quick. Just doing. It's a little bit of juggling. It's easier when there's Ryan here and K-Man here because they talk. You guys just are very quiet. So Dale, you got to help me out, man.
Okay.
You gotta.
I'm back.
Oh, Grega's back. Good. Hey, Grega,
You
are
got
you gonna
9 minutes, bro.
What's that?
Yeah,
Grega's good.
Grega lost his internet before, so as it seems, it's restored now.
All right.
So,
Well,
Wizard to
really
the
quick
rescue.
before Grega comes back in or comes back and shows a couple charts, I'm gonna show the dollar yen has slipped through this channel support, and this is gonna be pretty key support for the dollar yen. I've been kind of looking at this 101.40 level and 131.40 level, and that's going to be some pretty strong support. I'm not in the. I'm a little bummed out because I've missed the dollar yen on the short side. I tried to short it so many times last week, and my orders never got filled, and then it just started to go into utter free fall. Anyway, we're nearing some pretty key support here. I don't have a play. I wish K-Man was here to ask him what he thinks, but I would tell you this, that I think it is following yields pretty closely, and if you look at the 10-year, finally, starting to find a little bit of support here. So you got to watch the 10-year, because if the 10-year for some reason starts to reverse, we are at the, depending on how you want to draw this neckline, you could say we are at the inverted head and shoulder pattern neckline of the 10-year bond market. If you drew it, cockeyed over here, it just depends, how you're going to drop. But you have to be a little careful, because if bonds do reverse and we see this reversal like this, the dollar yen is going to bounce as well. All right, Grega, you're here. I want to let you go ahead.
Yeah. You should stop screen sharing. Okay.
There you go. All right. So what do you got? You were just looking at the 10-year. So
yeah. I mean, you have a point there. If really the 10-year US yields will shift back to the upside, and if these current levels are not going to be broken soon with acceleration lower, then not only dollar yen, this should impact all of dollar pairs, I think, across the board. So definitely something that we have to keep in mind. But overall, if I look at the 10-year US notes, well, you are potentially in a third leg rise. It can be a wave C, it means it can be a counter-trend movement, but even wave C, meaning that upside can be limited, still has a room for this retest of the upper side of this channel. So I think that equality level, of course, is something that we watch for, 123. So it means that there is room for further dollar weakness. If I look at the DXY very quickly, you will see here that I'm expecting and tracking a drop into a third leg of decline. Okay, so either wave C or wave 3, it doesn't really matter for the near term. I think that this direction is to the downside. I also like the idea that we actually make an overlap with 105.57. We have been discussing about this level in one of our past webinars, because even if that would be some kind of a wave 4 and this correction would be wave 2, well, wave 4 should not step into this territory. So since market made an overlap with this level, it means that even aggressive, bullish, impulsive interpretations were invalidated. So when one alternate count is invalidated, of course, the other primary counts are confirmed. So this just shows even more greater probability actually that we are going to see potentially more dollar weakness in
the context of a bigger than initially expected corrective move.
Yeah, that's the way it sounds.
Grega, or I know
well,
it's a very hard prediction to make, or would you think that there is a chance that dollar has actually topped?
Yeah, I think that there is a chance. But as you know, if I don't see on a big scale 5 waves drop, I will always try to be very careful.
Yes, I understand.
So for now, that's still only 3 waves of decline. We are also here not far away from the previous swing high. So from basic technical perspective, definitely we have to consider that this can be just a similar correction than each one here in the previous retracement. So something that obviously
does the still immature interpretation of a potential dollar topping is also showing up in other charts of other assets denominated in dollars, like for example,
US
precious
dollar,
metals.
Yeah.
Oh.
Yeah. Firstly, if I look here on the S&P 500, this pullback was very similar distance compared to the one in 2020. As you know, there was a lot of pessimism down there. And since if something, this cycling policy is really going to change, let's say by the end of the year, I think that there is a chance that these supports here, very strong one, will actually stay in place. However, for something bigger to the upside, you definitely want to see, and more clearer direction, you definitely
that trend line break.
Yeah, exactly. So for now, that's still not happening, but I'm just aware that this could be a neutral zone for now. But if this trend line is broken, I would aggressively turn higher. We discussed about the Aussie earlier before I went offline. Well, this was a very nice turn to the upside out of this wedge pattern. I think that this is an impulsive move, but we have RBA, as I said earlier, maybe they will not be that hawkish. So if that would prove to be correct, of course, some resistance here is definitely very technical around 70 level. So I was watching this Aussie for the last two weeks, but just didn't have good risk reward setup. I still think that this wave 2, wave B pullback could be in the cards. If we see a dip to 690 level, I think that this could be quite attractive level for potential longs here. Also, since I mentioned Aussie, here I have copper. Notice that there was quite a nice aggressive reversal from the lows. So this is definitely something that we have to consider. Also, the only thing that is maybe worrying me a little bit is Chinese yuan. Okay, you can still see here that, of course, there is a positive correlation with Chinese yuan and Aussie, but you can still see that this somehow is looking bearish, right? It's not really bullish. So I think that this is something that we have to watch for as well, especially if Aussie is really going to hold this resistance at 70 level, then I think that really that pullback could be coming on Aussie. If let's say Aussie will just continue straight to the upside, okay, and across the board, then what I would watch for is Euro Aussie. I think that Euro Aussie made some very nice breakdown here below this channel. So I think that this loss of 2020 is coming in play, is going to be retested. But I want to see on a intraday basis, or let's say in the next few days, I want to see this extension leg to the downside. Then watch out for pullbacks in wave 4. So the idea is here, we either see an extension to the upside on Aussie across the board, then Euro Aussie shorts on pullbacks would be, I think it could work very well for a break below these 2022 levels. If Aussie finds resistance, then watch out for Aussie dollar at that, as I said, 690 level.
I agree with you about the crosses. I spoke about them actually to the Morning Edge people last week. I think Actually, we have many of the euro crosses being in nice downtrends, but especially euros, euro kiwi, very sensitive, very nicely inversely correlated to risk assets. So if indeed the indices have bottomed, I think there is good downside here.
Yeah.
How about copper, Steve? You still think it's a bear flag?
It has started gaining momentum, but I have to tell you, Dale, that as long as we trade below like 387, I would not be jumping on the long bandwagon yet, having to do with copper. I have to tell you, I'm still very skeptical about it having bottomed. It's not something I would trade to the long side yet, for sure.
Okay.
Silver definitely with a much better structure, but the timing was very similar with this bounce, obviously, between copper and silver. So here I have this silver. I mean, technically, this is a very beautiful pullback back to the previous swing support. More importantly, the market respects this level, at least for now. There was a nice monthly reversal.
Beautiful dragonfly doji on the monthly, right?
And if I try to make combination with the Elliott wave structure here, clearly a very nice, very strong move here from 2020 lows with 5 waves, and then a counter trend movement that we've been tracking recently. And I can count 5 waves down on a wave C. Now, here comes the best part. Since we have this very nice and strong response from that levels, let's say that we go with the minimum expectations and that this market will not reverse all the way back to these highs. Well, you still need 3 waves up, okay, to continue to the downside. So in either case, I think that for the next few weeks, this silver has more upside potential here, and I would be looking for our retracement back towards 22.50. And if someone is not in silver but want to play the long side, well, observe this wave B retracement. So whenever that occurs, I think that there can be opportunity on the long side.
Thank you, Grega. Nice stuff. Good
Welcome.
stuff. Wizardly stuff. All right. So,
Hey, Dale.
Yeah.
I want to say, I know you have the person that you're interviewing is here. Gary's here. I want to say thanks, Grega, for being here today. Steve, Stelios, with Ryan and K-Man out, it's a smaller group. We have a lot of people out on holiday right now. A lot of Europeans are out, and it tends to be a pretty slow month. However, if you guys are trading, throughout the course of this month, I think it's going to be a really hectic month to be in the markets. I think it's going to be like, it's going to be
not like other August.
I don't think it's going to be like any other August that we've seen, Dale. And I don't think, I think we're going to get a lot of volatility, and it's lack of liquidity. You can actually feel it now. You can feel that liquidity is starting to dry up, which means that volatility is going to be increasing, meaning that, you got to watch your position sizes. You got to, be careful being too aggressive, because things will move. They can move quickly. And you might say, well, I want to be more aggressive because if things can move quickly, I can make money quicker. You can also lose money quicker. So, just adhere to some of that advice, in my opinion. Just be very careful about your sizing, especially if you're in the trader funding program. If you're in the trader funding program, make sure you're trading smaller sizes. Remember, you don't have a time limit to pass our assessment to access the larger accounts. And so, you don't have to try to cram it all into August so you can be live trading into the end of the year. Just take your time and bring down your position sizes. Always mind your risk in markets like this when the markets are a little bit more volatile. So anyway, Dale, have a great interview. Thanks, team, for being here, and Grega, thank you so much for stepping in. We hope to see you more this week, Grega, if you can.
Yeah, sure. I will be there.
Awesome. All right. Thanks, guys. Dale, it's all yours.
Thank you, Blake, Dream Team. And Gary, live from Barcelona. How are you, buddy?
Excellent. Can you hear me?
Got you now, Gary. So is this a vacation?
Well, I never have a vacation, so
well, a different location.
Yeah, just
different venue.
I have 3 screens sitting in front of me. It's actually, I'm in southern Spain now, near Marbella, And it's 2:30 and well, it's 2:30 here and ready to work. Simple as that. How do I
Okay,
share screen?
On the bottom, cursor, green box.
The green box.
Your cursor on the bottom of the screen. You'll see it there.
You got that?
Yep, it's coming up.
Oh,
Okay.
I love
All right,
modern technology.
Okay, so the bullish dollar.
Yes.
The long dollar position ETF.
Yeah, first off, I want to say that last gentleman, I have no idea what a dragonfly is, but God bless him. He sounds like he knows what the hell he's talking about. So,
yeah.
Boy, oh
well,
boy.
You've never seen a dragonfly in Chicago? They used to scare me. Okay.
I have no clue, but
Okay.
we all do what we do and all that fun stuff. So you
All
ready?
right, so call it a head and shoulders on this top then, right?
That too. Well, first off, thanks for having me.
Great to have you, Gare.
What I want to do, sometimes there are just such direct correlations in the market that it's all about your eyes. And, I always complain about people that have called the bottom 14 times in the last 6 months. I don't mention them by name, but I'm always amazed to see, and I always tell people in bear markets, you'll not get any help from Wall Street. We've seen downgrades after stocks drop 80, 90%. I just beg to everybody, make sure that's a lesson for you, that there are just 2 words that matter most when investing, and that is watch price. And I am amazed how simple those 2 words are, but how the masses just don't watch price. Price gives you so many indicators, so many thoughts about fear and greed and money made and money lost. It's stunning to me. And the great lesson of just since last February, when we started the top in all the bubbles, I remain stunned about how much money's lost in those bubbles, in the high beta growth names that are down 50 to 90%. Just make sure going forward it's a lesson, because if you haven't learned one from this, get out of the market completely, because you have not learned that you need to make sure you have specific sell rules, because you never know. So just wanted to start with that.
Okay, thank you for the homily.
All right. So,
but it's true. So what are you thinking here? So, we had those lows right around the solstice in the market, and more recently, the dollar looks like it may have put in a top. Do you think a dollar weakness will be embraced by the market? Because they're certainly complaining about it being a drag on earnings.
All I can tell you, the dollar strength has been a big problem for the market. So dollar weakness, maybe that's better. For me, I have a much better direct correlation, at least in my eyes. But I just first want to start with my worries. And this is just me, but I am just a big believer that bear market bottoms, real bottoms, do not have froth and speculation. I've studied every bear market bottom, and pretty much 100% of them, that's a good number, carry with it nothing but doubt, wiping away the speculation and the froth. And I just noticed this while I was in Spain. Hold on 1 second.
So you think people are euphoric because of this bounce we've had?
Well, let's take a look at HKD, a $7.75 Hong Kong company, and now has a $75 billion market cap. It's gone from 7 and change up to 400. And I'm thinking to myself, wasn't that happening in the middle of the bubble as things went insane? So this may be nothing. All I am just saying, I'm a big believer in just seeing everything and keeping things in what I call my file manager. And I just was saying to myself, what the hell is this? And I just don't think these things happen at bottoms. And if I go to this weekly on this chart, $75 billion market cap for a company with, it says 24 million in sales and hardly makes money. So just keep that in mind at the outset as I start this. That scares the living heck out of me.
Yeah, that
and
there's
maybe
still that
it's-
kind of, well, it's a low floater, so it wouldn't easier to manipulate or what?
whatever it is, low float doesn't, for me, it's the outcome that matters.
Okay,
And this to
can't
me,
rationalize it away.
it should not be going on. Bottoms usually take months to get people speculative and frothy and stuff like that. And this is one, it's only one, and there's a few others, but this one is the one that stuck out for me that I wanted to bring up. Here's my other worries, and I'm going to just start with that. Good bear markets usually have 3 big legs down. And all I know is right now, I think that's 1, I think that's 2. And where's number 3? That's part of it. And also, I'm not the biggest of VIX guys, but besides, I think this is a bad print. If I'm, you know better than me. Look at the VIX.
Yeah, we never had the explosion in VIX.
Yeah.
So that's telling you we didn't, that the decline was orderly or manipulated.
Yeah, I don't know. It's just a worry of mine, and something that you said before about liquidity.
Yeah.
It does go both ways. Look how from Wednesday at 2:30 till the close Friday, that was no liquidity on the upside. So we'll see what happens. I'm just a big believer right now in the 50-day moving average. If you stay above it right here, I'm showing the NASDAQ, good.
Yeah.
If
Yeah.
you get below it, bad.
Okay.
That's the best way to explain it. I believe if we get back below it again, I think that third leg comes, and usually the third leg is not very pretty. And I will tell you up front for the masses, I have one stock in my eyes that if that does occur, they can't, it's not even at Facebook anymore. They can't even rally Meta in a big short covering move of the last few days. I got a sneaking suspicion this has a chance to implode from here if the market, does indeed take the next down. So right now I'm looking at what hasn't rallied, because it's easiest to isolate weakness when the market's strong, and we've had a pretty good rally in here. So just for everybody to keep that one in mind. I wanted to bring that up to you. And my last worry is simplistic, and people that watch me on TV or listen to me know the more people that are running the country are a bunch of morons. They're now coming out with the inflation.
Why don't you just tell us how you really feel here?
Well, you don't need me to tell you. 30 trillion of debt tells you. They're coming out with something called the Inflation Reduction Act that will do nothing for inflation. And they're also telling us it's going to cut deficits. And I asked the question, when is any program from DC cut the deficits? So the con artists are at it again. And then, of course, the Fed. I've been saying now for a couple of months, they really don't matter right now because how far behind they are. They're still playing catch up. And the Fed right now is still below the 3-month Treasury bill. So they're back in the game, but I don't know how much they matter unless they start going to 3.25, 4 on Fed funds. And then we'll see what that brings. But you already know they've got everything wrong. And I worry about them doing too much. Somebody said in the last interview, central bankers not is a tough job. Yeah, it's not a tough job if they just get the hell out of the way. And they decided to print up to $9 trillion. The lemming in the European Central Bank followed suit and was worse with negative interest rates. They were just celebrating as being tough in Europe, raising rates to 0%, which somewhat boggles the mind. So that's my other worry.
Well, then it sounds to me like you would view this rally in S&Ps from about 3,600 to 41 as at the minimum a chance to get out of longs, at a maximum looking for shorting opportunities.
Well, a couple of things. I'm a big believer in the here and now, and so far so good. Leadership though is not big. It is picking up a little bit where some things are breaking out. For me, the number one stock as far as beta is Tesla, and it's getting going, so that's decent. But overall, most everything looks like this, and I'll just show it again. 90% of what I scan looks like this. This NASDAQ like this, or the S&P.
Constructive.
It's constructive. It's coming up finally above the 50-day. And
you think we're going for the 200? Think we're going for the 200?
I think there's a chance. I don't know, but I think there's a chance. My job now, you first gotta deal with this 41.77 here, which you can do very quickly the way it's been going. My job now is to measure the pullbacks, if they're controlled, if volume doesn't explode, if the day's over and I scan, I can't find a boatload of things already breaking down, and they're just maybe doing something like this, that would be something that tells me when we're not in bad shape just yet. Of course,
how about the oil shares? That's been a darling, and I'm looking at crude on major support. If it breaks down, I can't see that being good for oil shares, and I think they bounced last week, but they're not making new highs for the first time in a while.
It doesn't look great. Let me put it that way. You finished at the low Friday. You come in here. I think you draw one hell of a line right here. This is a reversal back on this day, a break below there, and see ya into here. So I don't own any oils right now, but some are better than others and a lot are worse than others. So I'm just not there. And I'm also, I made the call on this day. I thought oil had topped, and I knew it would definitely top right here for now. And then you got all this in commodities. I mean, look what they've done to that. That's copper. Here's probably a little near-term low. Here's corn. I mean, these things have been in pretty good downtrends. After big drops, this is wheat. After this drop, you're getting a little bit of this, so maybe they're bouncing. But for me, overall, in a bearish sense, and I think that's what's helped. And this is where I want to get into my direct correlation. Here's the 10-year. Very simple.
Looks like the dollar.
Pardon?
Looks like UUP.
You have to, and you see that little back here in January. That was the day the 10-year started busting out. Within a day, the broad market topped. Simple as that. This right here is June 17th, where I believe that confirmed the top. June 17th was the low, the low on the S&P. To me, that's the direct correlation. This right here, I think got the juices flowing. I said on Saturday in my notes that I believe yields are oversold, that the market's overbought, so we're probably going to pull back, and yields are bouncing up here. That's just short-term stuff that doesn't really change trend. To me, that's the direct correlation that I'm watching like a hawk. Correlations will only last so long, but as long as it stays a correlation, I stay on top of it. So to me, for your audience, really watch this. And you mentioned it, the dollar also. I think this is the driving force behind things, and where she stops, don't know. But for me, the big broad, we haven't had that third leg down yet. And in the last week, I've just noticed a hell of a lot of bottom calls, a lot of talk of, well, what we saw in the last week, 70% of the time this happens, 90% of the time that happens. Oh, this happened in 1947, so this has got to go on. For me, back to my 2 words, watch price. And we'll see what comes of it. I think there's, my best guess, we got some more work to do. I hope that's wrong, because I like people making a hell of a lot of money, and Wall Street is a fully invested long vehicle. But as I stated, you get the stance.
I have the stance. Any view on the miners, silver miners, gold miners? Gold miners have been pretty poor.
You know, I think gold bugs got to be pulling their hair out. You know, definitely that's dollar related.
Right.
But, you know, with inflation and stuff, if somebody told me a year ago that inflation would go to 9%, I would have thought gold would be at a bazillion right now. And
Okay.
gold miners would be insane to the upside. So what's at work here beats the heck out of me. We own the gold miners. We sold that day right here. We did not like how this broke right here, and we are trend followers, as they say. And little did we know, I mean, I can't believe what they've done with them. And
Yeah, they're cheap.
The market doesn't have a lot of in-betweens here. When something gets going, it kind of gets going.
Yeah.
And what they did with, and this is important, what they did with Newmont here.
Oh yeah. Well, is that a bad earnings report or what?
Yeah. Okay. Market no likey, as they say.
Okay.
So, you know, overall near term, short term, I think yields bounce, probably get a pullback here. I'll know a lot more on the pullback as far as stocks. That's just short term stuff. More of an intermediate term, as long as the 50-day holds for the major averages, there's opportunity to go higher. If they break, I think look out based on that, you know, a third leg down.
Yeah.
But I'm a day-to-day guy, and as it comes, you know, there's leadership in the market, not a lot. Some weird names. I do want to show this though. Amazon. There's Amazon with the big gap.
Yeah.
But you're dealing with massive overhead on a 20-cent loss. So we'll see what comes of it. Typically with these big names, if this thing puts in a little, you know, pullback or a handle and breaks through, I may look to buy. Apple for me, I'm bringing up these 5 names on purpose. Too extended for me to touch, but once it broke back above, but earnings suck. I mean, down 8 + 2, one of their worst. Here's Google, number 3. Looks like crap, but also it rallied up on a -1%.
Yeah, it cleaned out all the stops and then turned up.
Yeah.
Last week.
Microsoft, once it didn't break those lows, Microsoft breaks above the 50-day on their worst quarter.
Look at the close before it. Look at the day before it gapped up, it was at 250, closed on the low of the day, and then it gaps up. If you were short, you're trapped.
Bingo. And I will tell you this, I had a little QQQ position. I sold, we had bought like in here, I sold like in the middle of the day here, because I said, well, all these big guys are coming out and things look like they started to break down again. And then they gapped everything up. I lost a little bit, no big deal. And the 5th one is Tesla. And here's earnings day with the good move. And then last week, and that's what I meant by Tesla being, you know, the beta. When it gets going, those 5 names are 41% of the NASDAQ 100. So I'm thinking to myself, man, you got 4 with crappy earnings. What's going on here? I just wonder if a lot of parking is going on in the biggest of big, just in case. And we'll find out, because I do believe, and I called this very well. This whole thing here with Apple, I said that was parking the hell out of money, de-risking, and just get into Apple. 16 billion shares traded every day.
Amazon at the highs too. They were calling them flight to quality stocks.
Imagine technology flight to quality.
Yeah, I know. That's correct.
You know what I think of that. So you got the overall, and there are some good names out there. Good leadership, things moving out, good reaction to earnings. But I've said for 5-6 months, anything breaking out, don't buy. And 99 out of 100 of them failed. So some things that have been working, just nothing spectacular, as they say. So I really haven't done much. And see H&R Block, I'm not buying a company with 0% earnings and 4% sales, but man, pretty good. And things like those are the things that are working. Here's a McKesson with a great chart, but they report this week. By the way, 1,000 companies report this week, so I'm being very careful. I like charts and Service Corp. They report tomorrow. Cemeteries, but nothing what I call boffo. I think it's just going to take a long time. Most everything kind of sort of looks like this in growth land. By the way, this is a good one. This is a strong name versus other names that are even lower than that. So we'll see.
That's a breed.
Yeah, I am not bearish this second as long as we stay above the 50-day. I am not, even with the last 2.5 days, I am not bullish. I think there's a lot more to work out. And if we go higher, and if we've seen the bottom of the bear market, I think there's going to be a lot of time, a lot of backing and filling because of all the damage done. And if you go back to 87, after we cracked, this is what the market did for the next year. It just takes a hell of a lot of time. So
takes time to recover from auto wreck.
Yeah, the more damage done, the longer it takes. But what I will be looking for is LA Gears out of 87. LA Gear was breaking out before the crash, crashed with the market. It was the first one to really turn up in earnest with volume, made a right turn for a couple of weeks, went back to the highs, and then went up 17-fold in 15 months because their earnings exploded. So right now, I'm in the midst on the fundamental side. Yes, we do that. What companies got 100%, 200% earnings, big sales growth, and are just bucking the downside? Not many, and I don't see enough to even discuss right now. I do know about the CELH, but this morning they did a deal with Pepsi. It's up another $8. It's a drink company. It's faddish, so I'm careful about it. So
okay, Gary.
So
I'll tell you
questions.
the theme. And speaking of good names, Gary Kaltbaum, that's a good name, and still skeptical that there could be one more wave down. 50-day moving averages are important support on many key issues. Correct?
Yep, and watch yields. I was always a big Fed watcher for obvious reasons because they were printing their minds out. But I'm just watching the 10-year yield right now. If it moves back up in earnest, market's going to get in trouble. If it keeps going lower, I think it helps. As I said, it's very oversold right here, so it's going to bounce. I think that's what you're seeing pre-market right here. But if it gets going again, look out. Market's not going to be able to take it. And why? We have a very leveraged economy. We have a very leveraged consumer. And I'll just draw 2 lines. This is the savings rate for consumer. This is credit card usage. So I don't think an economy can take higher rates, or if oil starts really starting to go again to the upside also.
It's breaking down today.
That is actually good news for the consumer at the pump.
Right.
The question is, with the yield curve, I believe inverted now, is it telling you we're headed deeper in recession? And if that's the case, could get even more interesting for earnings, and the earnings really do drive a lot of this. So
okay, best place for people to follow you on Twitter at Gary Kaltbaum.
Yes, and GaryK.com. We have our service. We manage money for a living. We have a service where we do a webcast every night now, and we don't tell you things. We show you what we tell. And we just to give you a note, we stayed out of the bear market. both with our money, clients' money, and the people that follow us, because we just follow a simple roadmap. And here is the roadmap to finish this. Forward breaks. Here's your bear market. Here's your potential bull market. The 50-day caps every rally in bear markets. That's how it works. That's been going on since the day the market opened. And whether now that you trade so much or whether you never traded back then because of how small the market was, this is the definition of a bear. It's classic looking. Not everyone looks that way, but I show forward because to me, this one is the example. It has no chance of coming out of a bear market until it breaks back above and goes through the process. And usually the process is the 50-day will flatten out. Let me just do this real quick. It'll flatten out. Come on, little guy. Like this. This is not working, damn it. Hold on. Flatten out. And then if things turn up, it starts going this way and price will pull back. And then you get the stair steps up above it instead of what you're seeing here. That is bull versus bear. And that is what we have our magnifying glass on every day to tell us what to be in, what to be out, and whether to be out. And that's how we stayed out of the market. It was actually pretty simple because the market really never gave any type of thought process that it wanted to turn up. I can tell you in the bear, we bought here and sold here. I think we bought here and sold here. And we just bought in here and we're still in right now. And praying.
Okay, Gary.
Let's put it that way. So there you go.
All right, Gary, thank you. Enjoy the rest of your working vacation on the beach in Spain. Thanks for taking time out of the day to, talk to us while you're overseas. Appreciate it.
And I always appreciate the opportunity that you guys have me and put trust in me. And I do thank you for that.
All right, Gary Kaltbaum, everyone, at Gary Kaltbaum on Twitter. Thank you, everybody. You could join the team in 14 minutes for the morning edge. Don't just count your stocks, count your blessings. See you guys for Turnaround Tuesday.